All right, you're looking at a daily chart of the Nasdaq, and I just wanted to go through a couple things. First of all, the August and September and the October, the three legs down correction, textbook correction, by the way. Then on November 1, it stopped going down on the 26th. On the 27th, right here, we have an attempted rally, and then 4 days later, here on day 4, we have November 1st, a follow-through day. November 2nd, a subsequent follow-through day, and then on that Friday, we pierced the 50 simple moving average. And then the following week, we had more power to the upside with one pullback here on Thursday, but we closed the week with the hammer candle. I'd mentioned the last 2 weeks were hammers right here and right here, and now this week we have one going again this week, but we'll just take it one day at a time. And today we gapped higher on in tame inflation data. It was up 2.37%, 326 points, and closed at 14,094. And you can see this is 5.2% above its 50 simple moving average. But as I want to zero in here and see something very important. The green line is the 10 EMA has crossed above the 50. The 21 EMA, these are shorter term moving averages, are crossing above the 50, the longer term. And so now we count until we get into a power trend. Hopefully this trend continues. I think it will. You could see if you're, really, you don't want to get technical about it. After the three legs down, this thing broke above a downtrend line here. So, yeah, that was a Friday. Yeah, Friday of last week. So it's time to get bullish, up on the gas. I mean, I can't say anything more than that for the Nasdaq. And if you're looking for stuff, you don't have to chase stuff. I'm going to get into that later. Some stuff is stretched, but there's a lot of stuff still setting up. We have a ton of stocks on our ready listed MC stock chart, so don't go chasing stuff. This is a buy the dip type of market now. So yeah, wait till to come to you, and don't try to chase everything. Don't try to kiss all the babies. Just have your select few stocks on your ready list that you want to buy. Like if you want to buy Microsoft or Meta or Amazon or NVDA or I don't know, whatever stock you want to, but just stalk your stock and don't go chasing it. Okay. This is the Russell 2000 index, and this is a move not to be ignored, Dan. When an index moves 5.5% in a day, this is something to pay attention to. And I'm going to be putting more and more small cap and mid cap stocks on our ready list here. I was a little hesitant to do it because they're highly speculative, and the leadership was narrow, but it's starting to broaden out now with a move like that in the small caps. And the MDY is the mid cap exchange traded fund. This thing blasted higher, nearly 4%. It did butt its head up against the 200, but I think we're going to have to take a little look at the small and mid cap stocks now. Not that all the large cap stocks are bad. Like I said, when the index goes up like this, you're going to hear a lot of stuff, and you got to ignore it. That it's extended, it's stretched, it's overvalued, blah 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 blah. But no, it's not. This is just getting started, in my humble opinion, and we just take it one day at a time. But this is Apple, and it's just setting up in a base. It's been 17 weeks of consolidating. That's roughly 4 months. So it didn't break out. It's not stretched by any means. It's just still consolidating in a base and likely to trade, build this right side of the base up to this 198 or 200 level before breaking out. Microsoft, same thing. I mean, it's had a great move. I got into it here at 340. And big deal. Who cares when I bought it? But anyway, just built the right side of the base, had a couple of pullbacks. I think they go ex-dividend tomorrow. I don't know if that's good or bad. People want to buy this stock for a dividend. It's not even 1%. But if you just take a look at the weekly chart, you can see this is a nice symmetrical, rounded base, cup-shaped pattern. Maybe it'll form a handle, maybe it won't. Take it one day at a time. But these are not extended stretch stocks that are making new highs and tech's in a bubble and blah 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 blah. It makes me sick. Meta's another one. This thing's just consolidating in a base. These are the companies with, they're well capitalized. They have a ton of cash. They cut a lot of headcount. They're lean and mean. This one is consolidated in a 10-week base, and you can see here it's just starting to poke out of that base here. I told you this is one of my favorite charts because it sold off, shook everybody out on the earnings, and then ran right back through. So you can tell it was just a shakeout, and the buyers come in and say, "Hey, this is a steal at 279," and it's just been going straight up ever since. Still, I think actionable. That's up to you, but I would still buy this thing. I like Meta, I own it. Google, I don't like as much, but at least today it got above the 50. So there's something to be said for that. Amazon is another one that I like of the Mag 7. Once again, this is not stretch. It's had a flat base pattern and then consolidation. So between the 2 weeks, it's been about 15 weeks. And it's just still setting up in this base here with the, if it gets above 145.86, which I think it did today, made a new high. That's your action zone. This is not all stretched out here. So yeah. Follow the charts. Don't follow what people say. I mean, just the charts are telling you what's up. And so I got a bone to pick later on. I'm going to get to that. Tesla, this one was under the 200, and I was kind of taunting this stock. There's a lot of Tesla fans that don't want to hear their stocks in the doghouse, but now it's above the 200, but still 1.4% below that downtrending 50. So it still has a lot of work to do, in my humble opinion. NVIDIA, this thing, somebody said it was up like 10 days in a row. I don't really care. It's just a double bottom base here, showing strength. To me, this is still actionable. They have earnings next week, which is kind of a problem. But yeah, 10 weeks in a base, that's like 2.5 months, of going sideways. And that's what you want. You don't want your stocks going straight up. Then they crash and burn like Elf and Celsius, and they take forever to form a base. Okay, anyway, I was on the semiconductors with NVIDIA. AMD is another one that I like. I didn't buy. Well, this is why I say you can't buy all of them. Okay, I bought NVIDIA, but this thing broke above its downtrend line, and I knew it was a buy, and I just didn't pull the trigger. But it's certainly showing strength. It's a stock that I like, and you can see this base. This is not stretch or extended. It's still consolidating within a base. I think this bull, whatever you want to call it, this new uptrend could last a long time. These stocks can get stretched and extended eventually, but certainly not now. Broadcom, this is another one that was in this base. I got to show you the weekly on this because it had this is what I'm talking about, this long consolidation period. You can see that 65 weeks, over a year, right? Forms this little flat base pattern, which is essentially a handle, then blasts higher. Now it's consolidated for 13 weeks, and now it's starting to break above this consolidation period. So yeah, this one still looks good to me too. I don't buy it. I don't own it, but it's not stretched too badly. It's getting it's pushing away from its base. How about that? Anyway, there's some other stocks that I want to show you. See, to me, when I mentioned this last night, Synopsys and Cadence, when these things do well, and they both made all 52-week highs today. This is good for the semiconductor space. And somebody came at me like, Dr. Burry is shorting, semiconductors. I don't care. If you read Peter Lynch's books, he talks about billionaires are some of the dumbest people, make some of the dumbest moves. So don't follow what they're doing. There's no such thing as dumb money and smart money, because they make the dumbest moves, and their egos are so huge that they hold on to their trade, trying to be right, and they're losing their. This is a face ripper right here, 448 to 538. That's 100 points there, 90 points. So I don't care what Dr. Burry's doing. Look at the charts. Don't listen to the people on TV or the people on Twitter or whatever. The charts should tell you everything. This thing's making a new high. What does that tell you? Somebody's buying it. Look at the volume here, above average on these blue bars. It's making new highs with volume. Somebody wants to buy that stock. This is really good for the semiconductor sector because it's semiconductor. It's designed for semiconductors. Anyway, I'm going to get off the semiconductor space because I want to go to the home builders, and I'm a big dummy. I did not put these on our ready list. And I mentioned it in last night's video. These things were set up, and of course, I didn't know it was going to move 7%. But these, these stocks are set up in bases, and I still wouldn't give up on this if it pulls back a little bit. There's that nice little buy area there around 85. So Pulte, Holmes looks good. DR Horton, another one that, came up the right side, kind of flattened out. I'd mentioned these last night, but I didn't buy them either. I didn't know it was going to go up 5%, but that one looks good as well. Lennar, same thing. Built the right side, flattened out for a week, and now blasted higher. But to me, that 133 is still, your actionable area. So I'm going to keep my eye on these. I'm not going to chase them, when they're up, when they go up 5% in a day. That's a lot for a stock like that. And also they're getting a little bit further away, 7% from its 10 and 10% from its 21. So that's getting a little extended as well. But I just wanted to point out the home builder stocks today were super strong with the the yields going down, and allegedly, now I'm going to go to the retail stocks. I'm not going to say this, but when retail stocks go up like this is another signal that the Fed is done hiking rates. I'm not saying they are or they're not, but when retail stocks go up like this is an indication that the Fed is done, and interest rates may be coming down. I'm not going to say that either. They can hold here for a long time, but Lululemon was on our list here, and it just blasted higher. I like this little pinching action here recently, and then it traded above that, and then went flat for a little bit, but now it's extended. You can see it's pushed away from its base. So congrats to the longs with Lululemon. Deckers, it gapped higher, and now it's just flattening out, making this shelf. Really like that. It tells me that institutional investors are not willing to sell this stock. They might not be buying it up here, but they're not selling it either. So to me, that's a good sign for Deckers. AEO made a new high today. Just wanted to point that out. They report earnings next Tuesday. Abercrombie and Fitch new high. They report 11/21 next Tuesday. So a lot of these retail stocks had good days today. This is Chipotle, may appear on our ready list because I kind of like this base. I don't like the fact that it's $2,100 stock. They could do a 10-for-1 split. I could buy it for $210 instead. But anyway, you could see the big blue volume bars here, and somebody's buying Chipotle Mexican Grill. Another retail stock. They reported earnings this morning, and had a nice response. But this is a big, company to be up 5.5%. $300 billion company. That was a big, strong move for Home Depot. Anyway, I'm going to get out of the retail space. I want to go to the cybersecurity stocks. I've been covering these a lot lately. Probably sick of them. But we had this back here on our ready list as it was consolidating here about 160, 162. Then it blasted higher on this session, and then pull back. So it gave you another chance at 170. Now is at like 210. So I know a lot of people say, no, it's extended, it's stretched, and this one is. You definitely do not want to chase this one here, but I don't see any sell signs unless you just want to take profits. I'm going to talk a little bit later on about IPOs. In 2020, we had a confluence of circumstances that pushed a lot of stocks higher, and then they had the interest rate correction in 2022, and now they're starting to rebalance. But you could see CrowdStrike here. I said I was going to do this later, but it's been up 1, 2, 3, 4, 5 months in a row. While the Nasdaq was pulling back, this thing was going higher. So anyway, I'm gonna talk about that a little later. Zscaler, another one. I can't decide, which one I like better. About CrowdStrike, but I like this one just as much. Not quite as strong as the RS rating, but when you see this blue RS line go through the industry and S&P line there, the blue and the orange right there, that's showing strength. It's a leader in its group. Zscaler. Palo Alto Networks reports tomorrow. This will definitely impact that space. It's a big kahuna in the space, 80 billion market cap. And so I think they're going to have good earnings, and we're going to continue the rally. But I would have put this one on our ready list this week, but it's got earnings. So maybe after the earnings, maybe it'll pull back and give us a chance. We'll have to wait and see. I think there'll be good earnings. We just don't know the reactions to those earnings. And then QLYS. Another one making new high today, and that one's stretched as well. I would not, touch that 8% above its 21. So, yeah, some stocks, are still in basis, and some stocks are, extended. So you have to know, you don't want to buy a stock extended, then it pulls back, normal pullback, and you get shaken out. So Palantir, I'm going to go through a couple software names here. This is one that I like, and you can see this base on the daily here. This is not extended. This has been an orderly, even though it had a big move after earnings. This is another one of the IPOs I want to talk about. But you can see this is stage one base, rallied up. This is a stage two base. And this, to me, if you could see the 15 weeks length in duration of the base, and the depth is 32%. This looks really, really good to me. So I like Palantir here for a trade, or for a longer term deal here. MDB had this one on our watch list. I didn't act on it, but to me, and you can see, it's still in a base. Yeah, it sold off below the 50. It came down near the 200, and now it's rallied back through, but it's still, in a basing period here. Consolidation there for 17 weeks. So I still like MDB. These are not, even though they've had big moves, they're not like totally crazily wildly extended here. Datadog is another one, had a good response to earnings, still in a base. You got to look at the weekly, folks. This is what is it, 120? I think it's about 120 here is where this downtrend started. You can see the cup with handle pattern. The high in the handle would be the standard buy point, about 118. So it's getting there. But I mean, if you like it, take a swing at it. This looks good to me. BRZE is another one in the software enterprise space, and see, this is just consolidating. Yeah, it's had some big moves recently, but a smaller cap stock here. I just mentioned earlier about how the Russell's starting to move now, more risk on, and you can see it had a stage one base, moved up, and now it's in this stage two for 10 weeks. So that's another one that likely going to appear on our watch list. There's a lot of them here that aren't extended. So, we just corrected for 3 months, and we November, we started a little rally. Now people are saying everything's extended, short everything. I don't get it. I'm long. I'm as bullish about as I can be right now, because everybody's short and because everybody's on the wrong side of the trade. I'm just looking at the charts and saying, hey, these look pretty good. To me, I don't know. I don't get it. Sometimes people just want to short stocks. I don't know. And this is fix. We've been on this one for a long time. It had this trend after the breakout, this super nice trend, pulled back to the 51 time and then corrected. And stocks do this. This is healthy. People take profits. People think it's too expensive, so they short it. There's a bunch of reasons why the sellers come in. But anyway, you can see 21% depth in that base for 42 days. And you can see the cup with handle pattern, maybe on the weekly. Yeah, it's a short little base there. But you can see how it bases, goes up, bases, goes up, bases. So this is doing what it normally does, well within its character. Yeah, blasted out today, 7%. It's getting a little extended there, but these ones look good to me. And this is part of the kind of the home builder construction cohort. This is Lennox high-end air conditioners. Nice move today. And you can see this is just a consolidation pattern where it broke out of today. That looks good. MOD. This one is still consolidating. You can see this flat base pattern, sliced its 50, now made this little base. This is not extended at all. This looks good to me. So anyway, what do I know? That's it for me today, except for I lied. I want to just go through one more thing. And Target's reporting earnings tomorrow, but that's not what I want to talk about. I want to talk about some of the 2019 IPO stocks that came out. And remember, in 2020 we had COVID, and then there was quantitative easing from Powell. He got the printing press fired up. He was just zero interest rates, printing money, throwing money at the market. The Trump administration had the PPP program, and there was a stimulus program. People were just being handed money. So in 2020, there was too much money sloshing around, and everything went up. But then we had the 2022 pullback, and a lot of IPOs, a lot of software names, a lot of stocks look like this. But now it's starting to rebound. So, you know, if you're looking, we're looking at a monthly chart of Uber here, and to me, you know, 64.05 is what I expect, you know, at least to form a base here, an IPO base. It's gone through its you know, due diligence phase, and now it's in its advancement phase. I'm going to get into this on Saturday. I'm going to pick out my 10 favorite IPOs from 2019 and 2020, and this is certainly one of them. Datadog, I mentioned this one earlier. Another one, you know, was a rocket ship, you know, due to all the stimulus. Then the interest rates came in and it sold off, and now this is just an IPO base. So, you know, this was a what, $180, $190 stock. It's at 109 now. So, you know, to me, these things have a long way to go. I mentioned CrowdStrike earlier. This one was what, a 285 Zscaler. I'm not saying they're going to go all the way back there. Some of them will, some of them won't. But you could see Zscaler was a total rocket ship in 2019, 2020, and then had the interest rate sell off. And now it's just, you know, basing here and trying to get out of its due diligence phase into its advancement phase. And once they start the advancement phase, you never know how long they're going to go. You know, most of them, the highest growth stocks, they have their best years the first, you know, 3 to 8 years. So give these things a look, give them some time. I'm going to go over my top 10 over the weekend. Shift for payments, another one in 220. You can see the rocket ship, and then the sell off undercut the IPO. But, you know, now it's gone through its due diligence and it's in its advancement stage. It's another one that I like. Duolingo is another one. I believe it came out in 2021. Yes. Yeah, 2021. What a time to come out, right before the interest rates, and it crashed and burned. But now you can see it's making back to new highs. So that looks good. Spotify, this one came out in 18, went flat for a bit, had the 2020 steroid high, whatever you want to call it, and then crash and burn on interest rates. But a lot of them look like that. I'm going to pick out my favorite 10 and show you over the weekend. Anyway, that's my one more thing for today. That's Monday. DoorDash, some of you might like DoorDash. You know, when you IPO at that time, everything just kind of crashed and burned. Tough time to IPO. Cloudflare was one of my favorites here in 2020. This thing was on rocket fuel and just sold off with the interest rate hikes, but now it's starting to stabilize. So that's what I mean by these stocks are not extended at all. They're just catching their footing, stabilizing, and I think they have a long runway. And just think of, you know, maybe these things go back to new highs. You know, it's very possible. Some of these are going to go back to new highs. Some of them, you know, just by happenstance. MongoDB, another rocket ship that pulled back, but definitely another IPO to look out for. And anyway, I'm going to pick out my 10 best, you know, my 10 favorites for Saturday, and we'll go over them. On Holdings came out right before the interest rate here in September and then sold off. They had earnings today, and you know, not bad. It's a pretty tough business. They're the shoe business. They don't get high multiples. But anyway, I'm going to go through one more. How about IoT, Samsara? Another one that IPO'd, you know, right before the interest rates. December of 21 just went straight down, but now it's made its way back. So maybe it's been through its due diligence phase and ready for advancement. Anyway, that's it for me today. Don't chase, don't give up. If you didn't get your favorite stock and it got away from you, that's okay. There's many more, as Mick Jagger's saying, you know, they come and go like streetcars. Anyway, thank you for watching, and we never give up.